Welcome to Explain the Charts, where we break down the news and chart data to help you understand the markets. Today, October 29th, we're taking a deep dive into USDJPY, a currency pair that has been making headlines recently. The US dollar has surged against the yen, hitting a 3-month high, and this rally has a lot of traders wondering if it's just the beginning of a bigger move. Before we dive into the charts, let's quickly recap the current news and events that are influencing the market. Google search results reveal a combination of factors driving USDJPY's recent strength. The US economy is seen as relatively strong compared to other major economies, suggesting that the Fed may be able to ease interest rates more gradually. In contrast, the Japanese economy is facing uncertainty, with recent elections leading to a shift in the political landscape. This political instability, along with the Bank of Japan's continued commitment to its monetary policy, is weighing on the yen. The market is looking to the Bank of Japan's policy decision in the coming weeks for clues on the yen's future direction. Analysts believe that the BOJ might end its negative interest rate policy in 2024, potentially raising rates to 0% by January or the second quarter. This potential shift in policy could offer support to the yen, but for now, the political uncertainty in Japan is likely to keep the yen under pressure. So, there you have it. The news headlines are highlighting a stronger US economy and a weaker yen, setting the stage for a bullish USDJPY outlook. Now, let's take a closer look at the chart data, starting with the daily chart. When we look at the daily chart, we see a clear upward trend. Over the past several months, USDJPY has been making higher highs and higher lows. This consistent pattern suggests strong bullish momentum. The recent surge in USDJPY has broken above a significant resistance level near 150. This breakout is a strong bullish signal, suggesting that the bulls are taking control. The daily chart also shows that USDJPY has closed above its 50-day moving average, another bullish indicator. However, we need to be aware of potential bearish reversal signals. If we see a break below the 50-day moving average or a close below the 150 level, it could signal a shift in momentum. In the short term, the daily chart paints a bullish picture, but it's crucial to monitor the key support and resistance levels closely. Let's switch to the 1-hour chart to get a better understanding of the short-term trend. On the 1-hour chart, we see a more volatile picture. USDJPY has been consolidating within a range in recent days. This consolidation may be a sign of indecision in the market. However, we also see signs of bullish continuation. The 1-hour chart shows that USDJPY has closed above its 20-period moving average, suggesting that the bulls are still in control. Moreover, we're seeing a series of higher lows, suggesting that the downtrend has been halted. These higher lows are forming a bullish flag pattern, which could signal a further breakout to the upside. The 1-hour chart suggests that USDJPY is likely to continue its upward move in the short term. However, we need to watch out for a potential breakout from the range to the downside, which could signal a reversal in the short-term trend. The 1-hour chart provides a more nuanced view of the current market sentiment, suggesting that USDJPY is still poised for further gains, but with the potential for short-term pullbacks. Now, let's zoom in on the 15-minute chart to gain even more insight into the short-term action. On the 15-minute chart, we can see that USDJPY has been moving in a tighter range recently. This tighter range could be a sign of consolidation before a potential breakout. However, we also see a series of higher lows, which is a bullish signal. These higher lows suggest that the downtrend has been halted and the market is likely to move higher. We're seeing a potential bullish engulfing pattern on the 15-minute chart, which could signal a breakout to the upside. If this bullish engulfing pattern is confirmed, it would be a strong bullish signal, suggesting that USDJPY is likely to continue its upward trend. However, it's important to note that the 15-minute chart is very short-term and can be prone to false signals. We need to be cautious about reading too much into this chart. Now, let's summarize the important price levels and things to look for in the coming days and weeks. On the daily chart, the 150 level represents a key support level. A break below this level could signal a shift in momentum to the downside. On the 1-hour chart, we see a potential breakout from the range to the upside. If we see a breakout above the recent highs, it could signal a further surge in USDJPY. However, we also need to watch for a potential breakout from the range to the downside. A breakout below the recent lows could signal a short-term pullback. On the 15-minute chart, we're seeing a potential bullish engulfing pattern. This pattern could signal a breakout to the upside, but it's important to be cautious about reading too much into this short-term chart. Overall, the news and the chart data are painting a bullish picture for USDJPY. However, it's crucial to monitor the key support and resistance levels closely, as well as the potential for short-term pullbacks. Keep an eye on the Bank of Japan's policy decision in the coming weeks, as it could have a significant impact on the yen and USDJPY.